Everyone, welcome to a live market update with Buying South Florida. We're going to talk about the inflation in interest rates and how these are affecting our local real estate market in South Florida. We're also going to talk about some opportunities that buyers can have or that we've seen buyers have in this crazy market. My name is Mario. For those of you who don't know me, I've been your local real estate expert since 2006. I focus on the finance side of things along with my team. And today we're joined by Dominic. He joined our team a little bit over a year ago. And ever since Dominic joined our team, we went from 2% interest rates and to quickly get over the 5% at a rapid pace. And it's incredible how quick these interest rates have risen as well as inflation. Inflation was a little bit more, you can tell a little bit more that it was going to happen, but the rate or the rapid increase in the rate was surprise to us all. So Dominic, since joining, how has the rapid increase of interest rates from 2% all the way up to fives affected our local real estate market down here?
Yeah, man. Well, first of all, thank you for the intro. It's a pleasure being on the team. It's a pleasure being on the live stream today. Glad we get to have this kind of conversation one-on-one, just kind of inform people of a market update and to just kind of bounce off each other here. But yeah, so I mean, since I joined, obviously rates were in the very low twos when I joined the industry, about roughly going on 2 years in the industry, coming up on this September. But ever since I joined your team, we were still in mid to high twos, and everything was looking really good in the market. And since then, rates have obviously increased exponentially, and we are seeing
And
rates
fast.
and fast, and we are seeing rates right now in the mid fives, and then dropping. It's steady. It's a steady fluctuation here in the market as it always has been. However, with these high interest rates, it seems that sales have not slowed down, which is actually incredible to say the least here in Miami, in Miami real estate in South Florida. I actually read an article yesterday on MiamiRealtors.com. The title of the article: Miami real estate posts seventh highest total home sales month in history. And just scrolling down, looking through, obviously we see here some facts here. Miami's April 2022 total home sales count decreased year over year, but performed significantly higher than every April outside of April 2021. Now, for these numbers to kind of populate and for us to see these as mortgage brokers, and from your side as a professional in not only real estate but in the mortgage industry, how exactly do you think that is? That even though with this steady increase in rates, and when I say steady, I mean it is a pretty significantly large increase in mortgage rates with the mid twos going up to now the mid fives. How do you see that even still with inventory being pretty low, that demand is still so strong and so high in Miami and in South Florida?
I think I think it's multiple reasons why the South Florida real estate market has such high demand. I think it all started back, when things started opening up for COVID. Florida was one of those states that opened up quicker than some of the other states. So a lot of people that were able to, transfer from up north and out west, they came over to Florida because they needed to keep their businesses alive, they needed to feed their families and so forth. So I think at the very early on COVID, it was a big transfer or transition from people up north, other people moving into the state just because of employment opportunities and so forth. On top of that, we also had an artificially induced interest rate market for mortgages where the 2% for those interest rates isn't something that was natural, or it came by market or naturally by market forces. It was because of the government stepping in and buying a lot of bonds and essentially pushing down the interest rates. Looking back, it was a good move because it kept the real estate market from crashing. If you remember back in March 2020, right when things shut down for COVID, there was a fast and rapid decrease in market values of about 10-15%, which lasted for not more than a month. And then quickly it jumped back up, and people began to realize how important it was to be a homeowner. because they needed to move out of the big cities. They needed to move out to the suburban areas, not be around so many people at the same time. So we saw we saw a big influx of population. Then the artificial interest rates, and then eventually as other states began to open up and COVID kind of came under control, the people that had already moved in just kind of stayed here, and then more people were able to move in. And South America, Central America opened up travel, so we saw some international travelers coming in. Europe started coming in as well. So South Florida in particular is one of those markets that doesn't compare to many other markets in the United States. We're very unique with the demand from Central and South America and from Europe, right? So I think that as we continue through this year, the rates went back up through they're in the fives now, pre-COVID levels. And I think as we get through the year, we will have to see a correction in the real estate prices and the value, that just to offset, right, the rise in interest rates. If rule of thumb, if you increase an interest rate by 1%, you're supposed, or technically, the value of the properties have to come down 10%, so that the buyer is still able to qualify for that same property or for that type of loan, right? So rule of thumb, if interest rates go up 1%, property values come down 10%. Now we've seen an increase in interest rates of two plus, almost 3% now. So if we go based off just that one factor, it stands to reason that we have to see a correction in the real estate market prices. But there are many other forces driving the prices up, and one of those forces is demand. People they want to live here. People.
Yeah.
I see that people are saying it's not a good time to buy, but I tell them it's an even worse time to be a tenant. I mean, what are you going to do, right? Are you just
Yeah.
going to continue to pay astronomical rents the rest of your life? You're never going to be able to pay off rent.
No, for sure. And now let me ask you too. I have a lot of people, obviously, close friends, family. They know I'm in the industry. They always ask me, hey man, with rates going so high, you think they're going to drop? Do you think they're going to come down? And obviously, like you just said, these rates that we're seeing right now are pre-pandemic rates. So everybody kind of was used to that, quote unquote, the new normal with the the low twos, high twos. What is your approach for a borrower, a potential borrower, when they come up and say, oh man, the rates are just too high? Like, what is your approach to that? And what is the advice that you give as an expert?
Yeah, and it being too high really depends what you're comparing it to, right? Because if you're going to compare interest rates to artificially created low interest rates back in the COVID years, you'll never have that again. You can't now sit around and say, and wait for the interest rates to go back down to 2%, because those were artificially created interest rates. And unless COVID or something like COVID happens again, it just won't happen. And everyone's situation is a little bit different. There's not one answer, one blanket answer for everyone. You can't just say, yes, it's the right time to buy. No, it's not the right time to buy. It really depends. And anyone that's, giving or taking advice in general isn't doing anyone any favors or any good by doing that. You have to be specific to your situations. For example, if you're a tenant, you live in a 3-2 rental property and you're paying $4,500 in rent, you're probably better off buying 10 out of 10 times. If you have the down payment, if you have the credit, then why not, right? So rates going back down, I think, is going to take another catastrophic event for the rates to go back down. I don't think it'll happen to be that low again. I think rates ultimately will come back down from this spike that we're seeing now, right? But no one really knows when, and that's the thing about the market. It's almost impossible to time the market. That's why investors, first-time home buyers, anyone that's looking to build a portfolio, your strategy has to be clear, to where if you're in the market medium to long term, then you don't worry about what's going to happen in the short run. You just kind of stay the course, and you buy your properties, you you secure your loans, and you build your portfolio over time, not trying to time the market. Because if you just sit on the sideline waiting for that 2 or 3% to come back, it may never come back. So you're just paying rent. You're throwing money into a black hole of just nothing, right? And then, 4 or 5 years down the line, then you're going to try to get a mortgage at that time, but you spent all this money on rentals, on rent payments, right? So it doesn't really make sense for someone to try to time the market, and especially for artificially created interest rates back from mid-COVID days. So I think everyone's situation is unique, and I'm hesitant to give vague blanket advice or statements. But I would say that don't try and time the market. Just stay in the market long, medium to long term. Buy your properties, create your portfolio, and I think overall that's a good strategy to follow.
For sure. And as a young first time home buyer, obviously I've started to dip my feet into the market. I want to start to look to purchase, hopefully by the end of this year, if not early next year. So for someone like me, going in and really looking to purchase my first place, but also having that goal of wanting to become a real estate investor, and to purchase my first property. Like I said, we had a conversation where I told you, oh man, I want to come right out the gate and do a single family, and you were like, whoa, give me a second, hold on here. Let's see, maybe like a 1-1. Maybe we can start with the 1-1. So, when do you feel is the perfect time to start purchasing? Do you say like at a young age, like at my age now, or do you think maybe waiting a little bit? What would your advice be on that?
Man, it's again, everyone's unique, right?
Mm,
Some people just they don't want the work of being a landlord. They don't want to have to deal with, having 10, 15 properties in their portfolio, and having to deal with, property managers and tenants that don't pay, and tenants. So it's not for everyone. I
yeah,
think early on you have to determine really whether what your strategy will be going forward. If it's the fix and flip strategy, if it's the buy hold strategy, if it's the buy hold and short term rentals strategy. I think that has to be clear, because not everyone can be or wants to be a real estate investor. But
yeah,
assuming that you've determined, hey, I want to build a portfolio, and I want to hodl properties over time and create as much wealth as possible, then if you do it, my advice would be, if you do it in a certain order to start off, it'll be much easier for you to build a portfolio of properties quicker over the next 4 or 5 years than it would be if you just jump directly into a single family residence.
yeah,
So, and we talked about this before, where if you buy properties in order from one condo, then our underwriting guideline says that as long as you're buying an improvement or a superior property on paper, it doesn't have to be more expensive, but superior meaning, for example, a 2-1 condo or a 2-2 condo, you can now buy that new property with minimum down payment, just 5% down. It doesn't require you to do 20, 25% down as an investor, right? So you buy your first 1-1 condo, then you buy your 2-2 condo. Then maybe if you find one, a 3-2 condo, 3-1 condo, something like that, you can still buy it with minimum down payment, 5%. And then you buy a townhouse. So you don't buy your single family residence yet. You go in that order, and then you go into a townhouse. Once you're in a townhouse, same thing. If you go into a 2-2 townhouse, then a superior property would be a 3-2 townhouse.
yeah, for sure.
And if you set yourself to where every year you're going to buy the property, live in it for a year, buy the next one, in 5 years, you could have bought 5 properties with just 5% down each. And now you're very well could easily have about $1 million in real estate just in 5 years with minimum down payment. Then once you're ready to buy a single family residence, then after you've built your portfolio that way, then boom, you jump and you buy your single family residence. Because at the point that you own your single family residence, you can't now go back and say, I'm buying a condo as my primary. The guidelines don't allow it. There's no underwriter that will believe that. 25-year-old owns a single family residence. Why are you going back into a condo? I don't believe it.
Yeah,
Guidelines doesn't approve it anyways. So if and now you would have your first property bought a single family residence, or a townhouse and you wanted to then buy a condo, you have to give 20% down
And
because
that's
it's
just
an
underwriting
inferior
guidelines.
property.
Yeah.
Yes,
Okay.
right. So if you
For
do
sure.
it, in that reverse order, you just spent all your money and qualifying power in a single family residence, and now you just can't build your portfolio going forward.
Awesome.
So that's one strategy that again, it's really tailored to everyone uniquely. It doesn't apply. It's not a vague blanket statement that applies to anyone, but it is one way that if you are a young investor and you wanted to create a portfolio, that's one way of doing it, where just 5% minimum down payment on your purchases.
Awesome. And I think there's a common misconception going around right now, especially like on like the YouTube side, where I know you've probably seen the videos where it's the thumbnail will be like how to get rich quick, and obviously the info they give you, the advice they give you is, build your real estate portfolio, build it, build it. It's passive income. And I had the same thought process. I was thinking, oh man, this is probably going to be passive income coming in. But now we had a conversation too, and you were like, man, listen, it's not passive. It takes a lot of work. And I mean, owning a property and having it as set up as an investment property. Can you kind of touch on that as well? Like whether it would be a long term or a short term, and how it would go about, like how you would go about it?
Yeah, I mean, these YouTube channels give a lot of like vague blanket statements, a lot of things that
Very.
that, of course, right? Sure, I want to go out and buy 10 properties. Yes, absolutely. But how do I do that, right? And I think that how to is missing in a lot, if not in most of those real estate YouTube videos or TikToks or whatnot, right?
Yeah.
Yeah, I understand. If I want to get rich quick, I have to buy real estate. But if you do it the right way or in order, you can do it on a budget. And as a novice investor, you can buy multiple properties following very simple steps that we can show them in and create a portfolio that way. I'd much rather do that, have a one-on-one conversation with a prospective buyer than to just say, here's a vague general statement, get rich quick by buying real estate. Awesome. Thanks for
Definitely.
the
Yeah.
advice. Yeah.
And that's where
So
the one-on-one consultations come in, that being an independent mortgage broker, just being that light for these young investors or for these middle-aged investors, whoever you are. The one-on-one consultations are so important because you really can feel the personal, what their personal goal is, and then continue to go forward from there. And like you said, with the underwriting guidelines, that's great knowledge that most people, I would say most people don't understand, is that if they want to purchase a single family residence and then they say, okay, I want to go in down the investment route, and then they really don't have the funds for a 20 to 25% down payment, then they're a bit stuck. So
yeah, and this is something that when people underappreciate or undervalue, when somebody comes to us, where we're tailoring our advice to that particular financial profile. If they walk into a bank and they say, I want to buy a single family residence, what do I need? They're just gonna tell them X, X, and X, and that's it.
yeah,
When they come to us, we're kind of figuring out the reasons why you want to buy this property. What are your plans, your goals going forward? And if the goals are, for example, buy 2 or 3 properties in the next 2 or 3 years, then hey, maybe you don't need to buy this single family residence at the end of next year. Maybe you can buy a 1-1 condo or a 2-1 condo now, or a townhouse now, depending on family size. And then once you're ready for single family residence, you can do your minimum down payment next year, and you don't have to pay rent for another 12 months. You don't have to worry about saving 20% to then buy an investment property. So that personal advice, I think, is very, very undervalued, and it's very important for someone that's building wealth and for someone that's starting out as an investor. And to kind of touch on your point that you made before on managing whether short-term rentals or long-term rentals, if once a person decides to become an investor, you have to determine what kind of investing you want to do, right? Again, I don't like general statements. If you say, sure, I'm an investor in real estate, what do you mean? Are you a search and flip? Are you long term? What is it?
Yeah.
interested in that. And I'm interested because depending on that strategy, that will determine the kind of advice and roadmap and strategy that we lay out going forward. Because if it's fix and flip, then we have certain loan products for those loans that are 12 months interest only, and they have no prepayment penalty, but you're paying a very high interest rate on that.
Yeah.
The reason is you're going to only hold the property 2 or 3, maybe 4 months. You're selling it. If you're, hodling properties and you're building wealth over time, then we have specific loans for that. Loans that, we can lower the interest rate by maybe adding on a prepayment penalty or two, because we know you're not going to sell this property in a year or two. You're going to hold on to it. As an investor, a lower interest rate is worth significantly more than having a prepayment penalty on there that you just don't care about. You're not going to sell the property, right? So, and many other strategies that come along with real estate investing, that at the end of the day, you have to really know what kind of investor you want to be. That'll determine the strategy. And then from there, we can kind of tailor our strategy and the loan products and the real estate strategy that we use to get clients to where they want to be in real estate.
For sure. Awesome. That's great advice, man. And there was one other thing I wanted to touch on here, and just kind of going through MiamiRealtors.com and checking the news out. Making sure that we both stay up to date on all things news and all things industry news. And I was checking this out, and there's a few articles that condo sales were actually on the rise in March of 2022. Now, this was for Broward County, Palm Beach, Martin County. Condos are on the rise. So why do you think that is? Why do you think that these condos are the sales in condos rather are starting to spike so greatly?
People are beginning to realize how important it is to own property and not rent. It's probably the best foundation for an investment portfolio you can have is to own your home, right? Not doesn't apply to everyone. There are some instances where you just makes better sense to rent. I get it, but the overwhelming majority of tenants, they're better off buying something. And you also have a lot of international buyers down here in South Florida. You have people from up north moving down, and buying second homes, investment properties, and they don't want to buy, in the suburbs. They want to buy on the beach. They want to buy in Brickell, in downtown Hollywood Beach, Hallandale, right? So that's why you're seeing a lot of those condo sales spike. There's also a lot of demand also for the Airbnbs out there. Now, most of the old construction condos didn't know to write in verbiage in their condo bylaws to prevent what's called transient property use or short-term property rentals in their laws. So what happens is a lot of those old condos, they can't stop Airbnbs from actually being done unless the associations, they get together and they amend the bylaws and they vote on an amendment to prevent short-term rentals. But it's really very difficult to do that. You got to have the majority of owners vote, and it has to be the majority yes, and that's a challenge of its own. So a lot of the older construction condos, you can get away with doing Airbnbs. Obviously, you'd always want to do your due diligence and check the bylaws, check the association, and so forth.
Definitely,
But
yeah.
that's one reason why, right? And then you also have the topic of inflation, and your money is losing a lot of value the longer you let it sit on the sidelines, the longer you just wait and hodl money. All this inflation is causing your money to devalue. So people realize that locking in your property, your primary residence, maybe an investment or a second home, essentially puts your money or invests your money in a product or a vehicle that locks in today's cost of the money. So it doesn't matter if your money continues to devalue, because you've already invested it in real estate. And if
Yeah.
you zoom out on the real estate history of values, it has always gone up. Even through the real estate crash back in 2008, values came back up. So inflation is affecting property values in the sense that it's creating demand. People want to reinvest the money that they have sitting on the sideline. Inflation is also affecting mortgage rates. A lot of people have a misconception that the Federal Reserve raising the interest rates is actually raising the mortgage rates, but that's not what it's doing at all. Federal Reserve is raising the short-term variable interest rates. And the reason they're doing that is to prevent inflation from running away. If they don't raise the rates of the cost of borrowing money, then people would just create more money. And
Yeah.
if you continue to flood the system with money, then your money devalues. So the Federal Reserve is increasing that interest rate to prevent inflation from continuing to go up. But the inflation rate itself, that market is what's driving the mortgage rates up. So people think that it's the Federal Reserve raising those rates, but it's not. Those Federal Reserve rates do not affect the fixed rate mortgages for the 30-year mortgage rates and so forth. It's really inflation. So think about it. If you get a mortgage today at 5%, boom, you're locked in $300,000. You locked in your 5% mortgage, but your money, the inflation is 9, 10. Some people think it's much higher than that. Let's say 10%. Your money is losing 10% value every year. So as time goes forward, the value of that mortgage you just got, the value in terms of like how much it cost you, goes down, because $300,000 in the future is worth significantly less than it will be today.
Yeah.
So money continues to devalue over time. You're locked in. You're only paying 5%. Inflation is way more than 5%. So you're actually making money by buying real estate, right? So again, it's every situation is unique. There are some instances where it doesn't make sense for someone to buy real estate, but the overwhelming majority, there's so many. It's just better to buy real estate. So many benefits, tax deductions. You're locking the cost of living today. Your mortgage is fixed for 30 years. If you look back at having a fixed mortgage going forward, and when you look back at like your parents or your grandparents, and you're like, wow, they bought their house at 150, it's worth 400 now. Well, you have to look back at inflation and adjust for that, so you can see the real price of the home back then. But what it's really telling you is that they locked in the cost of money 10, 15, 20 years ago. So the cost of that home was locked in, fixed for 30 years, and now they're making significantly more money. So it's much easier for them to pay that mortgage that they got 10, 15 years ago. That doesn't happen with rent.
Yeah, definitely. Well, no, man, that's pretty much all I had. I mean, that was awesome, and appreciate the insight and appreciate the conversations. Is there anything else that you wanted to touch on?
Um, I think we're looking at stats in the market, just looking at active listings. I think this is one of those precursors to what's coming, and we can anticipate that as values continue to increase, uh, you know, rents will continue to increase just as much. The cost of things is going up, insurance, taxes, etc. Then landlords are passing on those costs to the tenants, and then the tenants are having to pay for the cost of inflation. The it's it's never been so apparent how important it is for someone to be a homeowner. You're locking in your mortgage payment. You're locking in your cost of money going forward. So I think as time passes, people are continuing to realize how important it is to not try to time the market and wait for a market dip, and just stop paying rent. Buy the place if you can. If you're not sure where to get started, reach out to us. We can have a consultation, and we can create a roadmap, a checkbox list, etc., of how to get you to qualify. I think the solution for helping with the rise on rentals is not to like give rental discounts for from the government, or have rent control or anything like that. That's not the solution. The solution is to help people be homeowners.
Yeah.
If you help someone be a homeowner, you solve essentially all of the problems that come along with that person being a tenant. If you now try to solve the problem of being a tenant by just throwing money at it, it's not going to solve anything. But if we educate, we help people, we walk them through the whole purchase process, that will solve significantly more problems than just throwing money as, in the form of like rent control or something like that into the real estate market. So going forward the rest of this year, I think that it's worth keeping an eye on the interest rates. As interest rates continue to rise, we should see a plateau in market values, right? Property values. I don't, I can't imagine the market value is going to continue to increase at the same rate that it's increasing now. It's just unsustainable. So I do think that towards the end of the year, we may see a little bit of a correction in market values as the rates continue to increase. And one of the signs that I'm looking closely at is inventory. And we saw inventory increase from January to February to March to April. Now March to April wasn't that big of an increase in inventory in South Florida, but I'm very, very interested in seeing the overall new active listings hitting the market, or that will hit the market once May ends. If that inventory number goes up significantly, that's one of the first signs that I'll confirm that the market's beginning to shift from a full 100% seller's market and more to a healthier market where you can have negotiations between buyers and sellers. And it's not only a one-sided, one-way street where the seller just gets everything they want.
Yeah,
No appraisal contingencies. They get the family dog. They get everything. It's like, no, it's not going to happen
for
if
sure.
inventory goes up. And I think inventory will go up, in the next 2 or 3 months. That's what history tells us. The data tells us these next, 2 or 3 months are typically the highest with inventories in the whole year. So I'm keeping a close eye on that, as well as interest rates, as well as obviously the 10-year treasury bond. It's a good indicator of where the mortgage rates are going and all of that. So I do think there will be a little bit of a correction towards the end of the year, but there's never been a better time to be a homeowner.
Awesome. All right, man.
Well,
Thank you
man,
so much for everything, though. Appreciate it.
yeah, I appreciate your time, Dom. We'll talk in a little bit. For you guys, thank you so much for hanging on, and until next time, thank you.
All righty.